How's it going, traders? In this video, I'm going to show you the benefits of set and forget trading and how to do it, all using supply and demand zones. And if you want to learn more about supply and demand trading, hit that subscribe button now. Alright, so before we get into the charts, I just wanted to explain to you guys some of the benefits of set and forget trading compared to confirmation trading or any other strategies like that. So the first reason, in my opinion, the strategy that I'm going to show you guys here in a bit is very simple, and it also suits a busy lifestyle. I know a lot of you guys are probably still working full-time jobs because we're trying to build our trading account, we're trying to learn our skills, because a lot of us want to do this for a living at the end of the day, right? So the best thing to do right now, in my opinion, is try set and forget trading. A lot of people don't like it, but in my opinion, it is one of the best suited strategies for a busy lifestyle for people that are working, and it's a very simple setup, and it's very easy to automate, in my opinion, where you can set alerts, you can be alerted whenever anything happens, and I'll show you guys how to do that in a bit. Also, there's higher profit margin in my opinion. Obviously, some people might have different types of strategies with higher profit margin. At least with supply and demand, in my opinion, it's a higher profit margin trade. And also, it is almost higher probability as well because, as the last one says, you will be trading with the trend the whole time. Once we get into the strategy, you'll know what I'm talking about. I just wanted to explain some of the details first of why set and forget trading actually has a lot of benefits compared to other types of confirmation trading strategies. All right, so the first thing you need to ask yourself is, what kind of trader do you want to be? Do you want to be a day trader, a swing trader, or do you want to position/invest trade? What I personally do is I use the 4-hour, 1-hour, 15-minute chart, but I will also enter swing trades on the weekly, daily 4-hour, and sometimes the daily 4-hour, 1-hour time frame. And if you see all my time frames here, the last time frame on the right is the entry time frame. So for day trading, we have 4-1-15, which means 4-hour, 1-hour, 15-minute entry. So for the next one, we have 1-hour, 15-minute, and 5-minute entry. And I'll explain in a bit why we are using 3 time frames. But first, ask yourself, do you want to enter on a 15-minute, a 5-minute, 1 minute, or 4-hour or a 1-hour time frame, or a daily or a weekly time frame? It all depends on you and your schedule. If you're working constantly, you can only check your phone every 4 hours or something like that. Maybe day trading is not for you and you want to be trading the weekly, daily 4-hour or the daily 4-hour, 1-hour and be a swing trader. Let's say you work in the afternoon and you can actually day trade the New York session or the London session, whatever time zone you're in. Maybe you can day trade in that time frame. So maybe you can day trade the 1-hour, 15-minute, 5-minute, or if you really want to start scalping, you could be day trading the 15-minute, 5-minute, 1-minute time frame. So definitely just look at your schedule, figure out what time frame you want to be entering on and what makes sense for you. And it's going to be all dependent on your own schedule, and there is no right or wrong. This strategy will work on basically any time frame sequence that I have listed below. Alright, so the next step is to assess the trend on all 3 time frames. For this example, I'll be using the weekly, daily, and 4-hour sequence. You can use this for any sequence of time frames. You just need to switch it up. So switch out the weekly for the daily, or switch out the weekly for the 4-hour, and it'll all be the exact same thing. So in this point of time in the chart, we had sideways price action right here, until this demand zone right here had been removed. And if you can see, it was a very obvious and clear downtrend right here. We had a nice downtrend as soon as this demand zone was removed. So we can call this weekly chart a downward trend based on this demand zone being removed and this nice clear trend line down. So clearly the trend is down here, and that is the first step in assessing the trend on your higher time frame. Next, we'll go to a daily chart. And clearly, at this point in time, price was in a downtrend as well. There were times when we paused the downtrend. As you can see here, though, we clearly had a downward trend right here as soon as this low was broken. So we could have been looking for trades in this area right here for downward momentum trades, set and forgets. So our intermediate time frame, which is the daily, has now been trending as well, along with the weekly. So that is the second step to assess the trend on your intermediate time frame. And finally, the last step is to assess the trend on your entry time frame. So for this example, it was a 4-hour chart, and as you can see, we had a lot of moments in time where the 4-hour was trending. We had clear downtrend up here like this. We had moments in time where the trend paused, right? We had a little bit of upward momentum. So that is when you would not be looking for set and forgets on the 4-hour chart. But as soon as this low was broken right here, like this, we had that ability to draw, that downward momentum line or trend line, whatever you want to call it. At that point in time, it was possible to look for set and forget trades. Obviously, in this little area right here, it would have been time not to look for 4-hour supply zones to short because the trend was down. But as soon as this low right here was broken, that trend continued down. It started to fail again right here, started to continue down, and obviously in here you wouldn't be looking for shorts because the weekly and the daily were still downtrending during this whole time. But as you can see, we had clear downtrends right here. So that is the final step in assessing the trend. Assess the trend on all 3 time frames, and that is one of the key ingredients to proper set and forget trading. So hopefully that makes sense. And if you guys have any questions at all, just let me know in the comments down below if anything was unclear, and I'll get back to you. Alright, so after you've assessed the trend and you're looking for supply and demand zones to go long or short at, you're actually looking for continuation pattern moves down. So you're looking for that initial down move, the basing, and then the other down move down like that. What you do is you simply enter right here with a stop above and you wait for that pullback. Hopefully it works out in your favor. Not every time you're going to win. You will be stopped out sometimes, but the power of set and forget trading is that usually the risk reward is very, very high. So let's look at a real example here. How I would draw this supply zone right here. So clearly we had that initial move down like this. We had that basing right here. And then we had that other move down. So what you would do is you would take your risk to a reward tool like this. You would enter right there short, and then you stop above right here. And when you have price action like this before where there's kind of a lot of basing, you might actually want to put your stop loss maybe a little bit higher just in case. And this isn't, there's no really right or wrong way to draw your supply zone. Some people might actually draw it something like this, and that's fine too. I have a tips video, how to draw supply and demand zones. Definitely go check that out. The larger your zone is going to be, the lesser risk reward is going to be, and the less likely you're going to be stopped out. The smaller your supply and demand zone is, the more likely you'll be stopped out, but your risk reward actually becomes much higher. So that is how you would enter this trade. Like I said, just have a risk reward tool, enter a little bit before the zone and a stop above the zone. And if you guys want my zones for set and forget trading, if you're interested, check out the links in the description and become a YouTube member or Patreon member. You can get all my zones on a daily basis, so it can save you time, and they're very, very accurate. So definitely check that out. It could definitely help you with your trading. Hope to see you guys there. So that is the gist of it. We had a zone right here, and we actually had a supply zone right here like that. And both of them worked out very, very nicely. This one, the risk reward wasn't that high, but this one, the risk reward was actually very, very large. I think it was almost a 6-to-1 if you go all the way to the low. And after this part, I'm going to show you guys different ways to manage a trade and how you take profit. What I do is I simply have my risk reward tool like this, and I simply take profit at 3-to-1 because with my testing, it's profitable for me to do that. So I would have gotten out actually right here, and then there's actually another zone right here. So this one I probably would have broke even. Let's move on, and I'll show you guys how to manage your trade once you're in them. Alright, so how would I have personally managed this trade? Well, if my entry was like this and my stop was like this, my take profit would simply be at 3-to-1, and I would leave it like that. But how would I move my stop loss along with price? Well, as you can see, my stop loss would be right here. And what I do is I take this risk to reward tool, I find my 1-to-1 mark, and I would set an alert at 1-to-1. And when that happens, I move my stop to about half risk. And why do I do that? Why don't I move my stop to break even? Well, I've found with my own testing and my own hard work that when price comes down like this, moves about 1-to-1, you can actually see a retest of this supply zone and then a move down. So in case that happens, I want to have my stop loss protected and keeping me in the trade. Then I have an alert set at 2-to-1. And what I do after 2-to-1 like that is I have my stop at break even like that. And why do I have it at break even then? Well, I found that with my testing, when price moves about 2-to-1 and it comes back up and tests this supply zone again, it usually will break right through and fail. And after that, I just let the rest ride. I let my 3-to-1 profit get hit. Other ways of managing a trade, what you can do is you can simply take a 2-to-1 or a 1-to-1. You could take a 4-to-1, test it out. There's really no right or wrong. I've just found out what works for me. What you could also do is just continue. You could not have a take profit, right? Let's say you entered right here, just like I did, and then price moves down, and then you find this basing like this. So let's say right here, price came down like this, created this basing at this candle. Your stop could have been basically right here, and what that would do is I would have locked in a 1-to-1, which is great. And then at this point, we had a new zone right here, and you could have actually put your stop down to here. And what that does is lock in basically a 2.5-to-1. and then as price reacted down here, you could have moved your stop above this zone right here like that. And what that does is that actually locks in 3.6 to 1. So you can just continue to move your stop loss, and then yes, eventually you would have been stopped out, but you can start to be more aggressive with it and then lock in bigger gains. That's another way to do it. It's a pretty popular way. But that's pretty much it. I think I only really recommend those two strategies for managing your trade. If you guys have any questions about that, let me know in the comments down below. All right, to summarize, once again, there are 3 steps essentially. Step 1, very important, make sure that all 3 time frames are trending in the same direction. Step 2, find that CP, supply and demand zone, to go long or short at. Step 3, manage your trade according to your own testing. Test it out. And this is a very important extra tip. Make sure that you are not at any higher time frame areas of opposing supply or demand zones. And what do I mean by that? Well, right here, we actually contacted this weekly area of demand. So the weekly chart is my higher time frame, right? So as you can see, we actually contacted this weekly area of demand right here like this, and now we saw that reaction to it. That's why the profit margin was actually cut right here. Yes, it worked out for a bit, but since we were in weekly demand, your higher time frame, we actually blew right through it. So that goes for any time frame. If you're trading the daily, 4-hour, 1-hour, make sure that we are not at any opposing daily demand zones when you're going short, and the same for long. If you're going long like this, make sure you aren't at any higher time frame areas of supply, because that profit margin will be cut and you can actually have a higher odds chance of being stopped out. So that is a little bit of an extra tip. Like I said, if you guys have any questions at all, please just let me know in the comments down below, and I will definitely get back to you guys. And if you want to find my supply and demand zones, like I said earlier, join the Patreon or the YouTube membership. Links are in the description. It can certainly help you. It could save you a lot of time, and it can see kind of what zones that I'm drawing, and maybe you could actually use them to trade with. So with that being said, hope you guys enjoyed the video. If you did, hit that like button and subscribe. Cheers.